All right, so let's just talk about things without jumping too far around here. All right. Obviously, I think everyone now, even you had some stubborn people out there who thought this market, especially in individual names, weren't as tough as some some were making it out to be. And, they probably got chopped up a bit and have come to that conclusion by now anyway. All right. But this has been very correction-like underneath the hood, right? You got this rolling bear market, rolling corrections from sector to sector to sector. We've been able to avoid it for a good period of time, right? I mean, the first one to go was like the SPAC names and the Cathy names, one by one. There was always a big portion of the market, though, where money could rotate into, right? And that's because of the liquidity out there, based on what the Fed has done. There's so much money out there, and it's constantly moving around. So we've always had the ability to find spots where money could rotate. That's where sweepers can provide a huge edge. That's where sentiment can provide a huge edge. What happens is, as this rally has carried on and got long in the tooth, in a sense, it gets thinner and thinner. Okay. And a word we've been using a lot of is random, a lot of randomness. You get more of that. So, if you think back, like even 6 months, you knew if, the cyclicals were in play, you knew if certain names were going to catch sweeper activity, as long as the cyclicals had strength, you'd be able to cash your ticket there. You'd be able to see some constructive price action there. Now, it's so erratic out there that even, sectors that are holding up well, right, it's not as clean. There's this, one stock could look awful in the group, another stock could look great in the group, another stock could be dead in the group, and it makes it extremely difficult. Okay. And like even now, it's come down to, and this now, what I'm about to tell you, and you guys have been hearing a lot of it probably, even this now is becoming crowded. This is never going to go away. This is something like McElliott was talking about, the crash up, crash down. Everything gets so crowded. Money flocks to a certain sector, a certain type, like value, growth, to an extreme. It gets crowded, and then bulls get stuck, longs get stuck, and they stay out of favor for a lengthy period of time. That's what's happened in in SPACs, right? It always has to get to that extreme. Okay. And when it gets to an extreme like that, you have so many trapped and caught longs that it makes it extremely difficult to see any constructive price action for a lengthy period of time. It takes a lot of time to wash all that out. Okay. And that's what happened on the cyclical side for the reopening trade, right? We've talked about that now for almost like 2-3 months on every single webinar. Severely offside positioning, everybody in their mother position for higher rates and the reopening of the global economy. Yeah, super cycle, commodities, inflation. It got to the point where everybody was already long of that. And especially when things don't pan out, and it's been quite the opposite, right? We've been talking about that for a few weeks now. It's been the total opposite, rates plummeting in a sense, and deflation a problem. Think about it. Those groups, there's going to be pain there for a good period of time. And the problem on top of that, what we've been talking about as well, is we've had stubborn bulls, right? These stubborn bulls who are convinced, they think the market's wrong, right? The bond market's wrong. Rates should be higher. Okay, they don't care about the price action every day. They don't care that they're losing money every day because they have built that strong of a bias. And in my opinion, until we start to see There are going to be rallies like we've been seeing for a couple of days, squeezes when they get overdone to the downside and oversold. Okay. But until we see that crowd, until with our own 2 ears, we don't even need to see anything. Once you start hearing people giving up on that higher rate theme, on that inflation reopening theme, in my opinion, until we see that, it's going to be tough money there. It's going to be tough money. It's funny, Lewis, that from one breath to the other, they go from the bond market is smarter than the stock market, the equities market. The bond market always knows. But then when the bond market's telling them something they don't want to hear, they disagree with it. You know what I mean? Like they're talking out both sides of their mouths. So, but in my opinion, no matter what, forget about the macro side, forget about the COVID and Delta variant and China and everything else. I think until we start hearing, us noticing, just by listening to CNBC and talking to traders, around you, of players giving up on that reopening inflationary theme and finally are starting to be convinced of deflation, we got to be careful with all those cyclical type plays. Okay. And what makes it even more difficult is you have some really reputable people who have been pounding the table on this trade, and ultimately they may be right. It's a timing thing. They may be right, but because of how offside the positioning has been, in the whole, it's not even a group, right? It's half the market. It's probably got some work to do. All right. So now we're at a point where money's been crowding and piling into quote unquote quality, right? You guys are starting to hear that now? Quality. Just buy quality. And what the hell's the definition of quality? God only knows, right? So it's been this defensive type of positioning, even though you got the market near new highs, right? Everything looks bullish, but what they're crowding into now is actually, I wouldn't say bearish, but it's not bullish. It's playing defense, right? So they want the Bristol Myers of the world. They want large mega cap tech that's been through every ringer and bear market before, right? They want healthcare and big pharma, one, because of what's going on with COVID, and two, because the economy really doesn't have as much of an effect on them, right? They're not as cyclical as some of the other things out there, right? Names that have been knocking the ball out of the park, earnings like a CMG and stuff like that, they're just gunning them, right? You talk about SE, you talk about crowding, like it's getting out of control now. You know what I mean? Like because it's not that many names, right? It's not as big as the growth and the cyclical parts of the market. It's a lot smaller, a lot more selective. Okay, utilities. So now that's the new place where the money's going, and it could last. Okay, but what's ultimately going to happen is these names get overdone to the upside. Okay, they may be quality, but it doesn't matter. They get overdone to the upside, and the $1 million question is going to be, where's that money go? Okay, where's that money go when they start to sell these names that are up like a rocket ship? Okay, and there's usually a high probability, decent odds when it gets to that point that they don't rotate into anything. Okay, but that's in a normal market without a rig game and the Fed doing everything it's doing, right? That's when a normal market where liquidity is not flush all over the place and you're printing trillions and trillions of dollars. Okay, so usually it's the end before correction, a la late, again, that 2018. It resembles it so much to me. Forget about the backdrop to it, what was going on in the world and all that. Just the price action, what they're buying. Things can't catch a bid and just drip, 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 drip. Late 2018, when the Fed was tightening, that's kind of, what it looks like, when it feels like right now. And then, if you guys don't remember, those of you who weren't around, they piled into FAANG names primarily, okay, because that was the safest spot. The FAANG names just kept going higher with the overall indices. And then eventually, they wanted to sell and take some profit in the FAANG names, and they never rotated anywhere. Cyclicals got smashed. They didn't want to buy the cyclicals off a pullback, a huge pullback. So they didn't buy anything. And then the markets finally rolled over. All right. But that's a good thing, because once the markets finally roll over and FAANG and the mega caps and the defensives roll over, that's that reset, that cleansing that ultimately will set up a lot better of an environment, right, when that concludes. All right. So I think we got to get there at some point. There's got to be at least a portion of that. There's got to be even a minor reset before we get to a place where it's, I hate to use the word easy, but easier to make money in individual names. Okay, because when you got so much randomness like we have right now, you rely too much on luck. And not only that, the odds are against you, right? Think about what you need to go right now to cash a ticket in an individual name, okay? You need the market not to sell off that day. You need that sector to be on the right side of rotation. Even if it's on the right side of the rotation, what type of name is it of it? Is it in the sector, growth or value? What are rates doing, right? Are rates up? Oh, shit, that thing's not going to go up with rates up. What's COVID doing? Oh, forget it. COVID's flaring, right? There's a million different boxes you got to check off before, and then you finally get a little bit of movement to the upside, and then they rotate out in the other direction, and then it's right back to where you started again, right? So it's just not worth it. It's not worth it, right? The handful of winners you see, right, and the majority of them are gone already at this point. It's not worth it. So that's why, what we've been talking about and pounding the table on, and almost to annoyance, is staying really tactical here and put your trader's cap on and try to grind it out, trade through this, and eventually we're going to get to a better place. But just right now, it's not the ideal environment, and far from it. Probably the opposite for positions in swing trading. Okay, it would be even better if we were had a bearish backdrop here and everything was selling off, right? It's an easier read. Those of you who like to play the downside on a tactical basis can play the downside and find some success there, right? Those of us who like to play the long on the long side, when there's put sweeper activity all over the place, we know not to get long. It's an easy read, right? We get some bullish sentiment signals, boom, we have an entry. It's so much of a cleaner read than what we have right now, right? Right now, we're in the middle of no man's land. And like I said, just everything's so damn random. And that's without dodging headlines. What's China doing? What's COVID doing? What's this doing? What are bonds doing? So I think I made the point that, it's tricky out there. It hasn't gotten any better. It's gotten worse. Earnings played a part in that as well. We went still in earnings season, but we got through the heart of earnings season. All right. But I really do feel that at some point, something's going to give. Okay. And what I mean by something is going to give is this. I'm convinced, and we've been talking about this, especially most recent, and a lot of you agree. What's been going on as far as positioning in the markets, players have they thought they found a system in the market to print money, right? An easy way to make money. Buy individual names and buy S&P 500 or QQQ puts to protect your downside. Okay? If the market does have that 5-10% correction that it's overdue to have, you're hedged with the puts, right? If the market doesn't, right, individual names have been rewarding. Again, I'm not talking about what's going on now. I'm talking about how they've been positioning up to now. Individual names have been rewarding enough to where, you know, you can make enough money in the names to wash out your protection that you lose and still end up green, right? Nice hedge, right? The pain trade for that, right? We've been talking about this. The pain trade is exactly what we're seeing right now. Forget about the markets going to new highs. That is even worse because that buries them on their protection. And if their names aren't participating, they're losing that bag too. You know what I mean? So their S&P 500 puts go poof. They lose that money. And then the names, they're not doing anything either, right? Especially if they were buying reopening names, which they were doing, or commodity names or whatever. So that's the pain trade, right? So even though this market continues to go higher and do its thing, it's been quite painful for a lot of people. So what I mean by something's going to give, there's going to be one or two things that usually it ends up resolving, right? They either punt the S&P 500 puts, so they take off all their hedges and protections on the S&P 500 because it's a waste of money. The indices keep going higher. So what they do is they take off those puts and they get long the S&P 500 and the indices and ignore names, right? So now instead of long names protecting with the indices, they throw names out the window or even start shorting names and they get long the S&P 500, right? We're starting to hear that, right? Amongst retail players. Forget about individual names. I'm just going to buy the S&P 500 and hold the indices and play, right? You're already starting to hear that. So when they end up doing that, right, and the markets reel them in there, and you're going to start to see it in a lot of things we look at on a day-to-day, week-to-week basis, boom, that's when they catch them, right? They have no protection on, they're long the indices, and they get lumped up, right? So eventually it's got to give, right? One or the other has got to give. And it usually is going to resolve in some format like that, where it pushes them to one of the other side. The other side it may push them to, if we get a little weakness, is they've been through enough pain to where even though the market didn't really come in much, maybe it's down 2-3%, chopping around, they're so bearish that they threw in the towel. You know, so you get a correction through time instead of price. You know what I mean? And if that's the case, we're going to see, again, all the stuff we look at on the sentiment side, positioning side, we're going to see them throwing longs out the window, and it's going to set up an entry in a lot of names across the board that are already set up. You know, that's the beauty of what's going on in the market right now, right? We were talking about this. There's no shortage of decent setups, right? There are a lot of names that have pulled back nicely that we all would love to own. That's not the problem. You know, that's certainly not the problem. So if we do get sentiment to a point where they've frustrated long positions enough to where they throw in the towel, even though the market didn't really get hit too much, you know, it still could get the job done. It still could get the job done. Look at right now what's been going on. The indices have gone higher, okay, and sentiment has come in, right? Some sentiment indicators have improved. Hell, some of them, you were getting bullish signals like the fear, greed, and shit like that, right? You got bullish signals out of some of those things. So you had the market still going higher and that happening. If you get a little round of weakness to come in, it's not going to take much. So it's going to be one of the two. It's going to end up resolving. Was that, hey, where's the B of A sig? Still not close to bearish at all. Which, neutral. It's down to neutral. The bull bear, that's down to dead neutral now. Been leaking. Yeah, Dan. Could be just a 1 week correction. You know what I mean? Or it could be just chopping around for a few weeks with some volatility. It's not going to take much, especially because you have a lot of noise out there that's really bearish, right? You have a health scare out there, which is an effing disaster, okay? You have China that's making mashed potatoes out of everything, right? Every day, there's something else you could get worried about. It's just players are not going to get that worried when they see the market go to new highs every day, right? You still get, they're still not all bulled up, right? But they're not going to be at a bearish extreme with the indices going up every freaking day. So, yeah, and the Fed. We didn't even talk about the Fed, and the Fed. So, but it should make, listen, even we're at a point now, right? Seasonally too, it should be an interesting couple of weeks. We got expiration week. We've been talking about this week for a couple of weeks now. We got to be careful, I think, a little bit for the rest of the week at least to see how things play out, because we did for the last 2 weeks, we had an opportunity to buy any weakness that we saw, right? Because of where gamma was, because of where positioning was, we had an opportunity to buy weakness and at least get a trade out of it. All right. Even yesterday, right? Even today, in a sense. I think we got to be a little more careful now the rest of the week and see how this whole expiration week ends up panning out. Yeah, OPEX. And again, not to get it wrapped up into that gamma mumbo jumbo, all right? Because I can make myself dizzy, let alone you guys dizzy. But you had, based off S&P 500 positioning, you had a pinning effect, right? You had almost acting like a magnet for the past 2 weeks in S&P 500 options. Okay, that may not be around and likely won't be around anymore come Friday. All right, and we talked about, right? A lot of times they like to front run that. Maybe this is the start of that. I don't even know. The front running has been moving earlier and earlier each and every time. Okay, I told you guys when we had a setup like this, you could wait till Friday late day and then just get into cash and not worry about it. Then it went to Thursday. Then by Wednesday. Now, we just freaking started the week and you got to worry about it, right? Because the machine's out there. They like to front run. They front run everything. So that's what's going on now. And then, we get a little cleaner picture to see how things line up going into, September. All right. I wanted to show you guys a couple of things on the positioner side of things here. Look. So in the meantime, what do? We know what we do, right? Well, those of you, especially who are members, we talk about this constantly, so you know what we do, right? And with two, this is what if you're looking to play anything, okay? Even if you can be tactical, we want to look for entries here, right? Especially with sweeper activity when it's around to provide that momentum. And that's what we want to play off of. How long you want to hold it Do you want to turn it into a swing? Your guess is as good as mine right now. I'm being dead straight with you guys. I have no clue. No clue. I really don't. You know, and individual names, don't even ask. All right. I'm talking strictly major indices. You want to be on the safe side, S&P 500, ES, that sort of thing. You know, you get this signal intraday. That's where you're looking for the window, and you play off that. All right. So this is for me, and this is like the way I play in a correction. This is how I play in a correction. Okay. The only difference is the market's at new high, but this is how I play in a correction. You know, I stick to where the major indices as much as I can. And, you know, I'm looking, if I can pick up the money intraday, I take it. And this is all I'm playing off of. You know? Yeah, you can do that, Matt, without a doubt. The VIX puts. And honestly, you'll probably find more correlation because this is based off VIX. You could. Yeah. Without a doubt. Because sometimes, you know, you'll get the VIX stall and roll over before the market really picking up steam. You know, kind of happened like that today a little bit. So definitely off this. What did I do? I posted this. Oh, yeah. So this is the Bover Fund Survey. Okay, so this is where we picked up the long cyclical commodity, higher inflation, all sides, right? This is where it really hit home on us. Okay. Now we got a bunch of, I don't know what, nothing even close to what we had off that signal. All right. But basically what we have is we still have stubborn bulls in this trade. So here, this will show you better, okay? This is positioning as a whole, right? Banks, commodities, 1 and 2 on the long side, okay? Down here, last on the list, bonds. Okay, so what's been going on over the past month hasn't really made much of a dent to what their thinking is going forward. All right, as a whole. But when you look here, okay, and this is how massive, how lopsided the positioning was, okay? Because you look here over the course of the past couple of weeks, you could see they're starting to get shaken out of things. Materials, commodities, energy, industrials, you know what I mean? So this is over the last few weeks. And this is big picture. Right, exactly. They're finally starting to get shaken out of these things. All right. But, you know, there's still nothing actionable, is there? The banks, you know what it is with the banks? Here's the banks over here. You got the buybacks, right? You got the buybacks that everyone's scared shitless of. But with rates where they are, I mean, I don't know. I don't. Can banks actually continue to do what they're doing with rates where they are? Well, if rates turn up, then you're dead if you're short banks. So I don't really, on the short side, and you're probably saying, oh, you never see anything on the short side, but I really don't see anything appetizing enough here because you're off the extreme that we saw, you know, 2 months ago. You know what I mean? They're starting to get shaken out here. So I definitely wouldn't short. I definitely wouldn't short. I think we just got to allow things to play out. Again, the easy solution, guys, the easy solution is you get a little volatility or pullback in the market. You understand? It cleans all this. It cleans it all. We don't have to look at this stuff anymore. If you get some correlation to the downside in this market, okay, when we finally put in a bottom of sentiment, you can throw a dart at anything that catches sweeper activity, and it's going up with the market. That's what I'm saying, Lewis. If we do get a legitimate shakeout, I think the theme, I think people are going to be hung up on the theme. I think it goes out the window. Exactly. You know, I think you get participation finally, right? We've been doing this for such a while that we're so hung up on, all right, what's going to go higher if the market goes higher? But usually when the market goes higher, 8 or 9 out of 10 stocks go up with it. That's usually what happens. We're just so hung up on in this environment right now that we're trying to pinpoint exactly, what the hell is going to make money if the markets go up. But the answer is probably everything. Everything. And you know how you know that, Lewis? Because you see this shakeout we had here? I don't know if you remember it, but this shakeout, just this, okay? When this thing finally turned here, off sentiment, this, and this, everything rallied. Everything. You know what I mean? You didn't have to worry about value, growth, this shit, that shit. Everything rallied. Yeah. So that's just off this pull. If you get a decent shakeout, you're going to get a nice stretch of solid participation. So that's the easy solution. That's the easy solution. But they haven't wanted to give us that for a while now. Another thing is breadth. Like you see some of these breadth readings. I mean, breadth is wiped out already. Like, that's what I mean. How do you get bearish? Well, it's a short-term thing. It can bounce. Hold on. What's that thing here that I looked at today? AD. Oh, I don't have it on. Like, if there's more weakness, if they're selling tomorrow, you're going to have bullish signals off washouts. The hell did I do with that symbol? I'm on a different computer now, the broadcast computer. I don't know where it is. Hold on. Oh, I could use this. I could use this. What the bear with me. Hold on. What the hell? The line does it better. So you see this, right? This is just a advanced decline ratio thingy. And this thing slammed on the concrete right now. That's how awful the market's been underneath the hood. Yeah, slammed. And where usually when you get down here, you get a bounce. Unless you're in, Schitt's Creek, up Schitt's Creek, like something bigger going on type of thing. So, I mean, there's a lot of things wiped out right now, wiped out. Yeah, small caps, somebody was saying small caps can't catch a break. Just the blending, what goes into small caps. I finally found out, Lewis, well, this is their opinion anyhow, what's been weighing on small caps. Small cap biotech. Biotech has been this. Yeah, on top of all those little growth names, So like you get a bouncing growth, right? You think, oh yeah, maybe the Russell can rally. Look at this, and look at this. Syl showed me this today. Labu, Labu? Look at Labu. This looks like the Eiffel Tower. Look at this. Look at this. Nuts, right? Now this is small cap, exactly, the middle finger, you're right. This is small cap biotech, right? You want to see the big guys? Wow, that's a big difference. No? That's a big difference right there. Same sector, just large cap and small cap. That's a big, big difference. So, and small caps got a shot to lead us out of any pull that we get, if we do get it, and that would be nice. So yeah, I mean it's been miserable. It's been miserable. Yeah, right. I didn't even realize there was that big of a difference in between XBI and IBB. But XBI, you have a lot of those Kathy Wood biotech names, right? Those takeover targets. Remember how hot they were? IBB, you got all the mega cap, the big guys. Chris, we're already in the quality phase. We are in the quality phase. What do you mean next phase? We're in quality. Do you see these stocks, the quality stocks? If we are just getting into the quality phase, you're going to have these things go through clouds. Where do you want them to go? But that's exactly what's going on right now. Everyone's picking up on this quality theme, and that's where the crowding is. Listen, I get it. These names are all studs, These are, look, Costco. Oh my God. Later, Parv. Wow, Peter, I didn't look at this in a while. I remember looking at this. I couldn't believe it. Holy macaroni. DHR, we looked at that yesterday, 10 off the sweep. These things are insane, and I get it. They're great companies. They've been ignored for a while and they finally get noticed. But eventually, they're going to be overowned. They really should split, get an extra kick out of them, right? Yeah, it's just these things have been running for a while, running for a while. There's a lot of these things too. Home Depot got hit today off earnings, right? That's been a great name. These things are high. Some of the quality defensives, yeah. Some of the quality defensives, staple names, people think they have some more upside because they've been ignored for so long. Like this, Kellogg, but this is defense. These are the names you own when you don't want to be long stocks. You buy Kellogg, right? You buy Kroger. Look at this. This is not bullish environment. Exactly. 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 You know, so yeah, the quality thing, I'm not saying it's done here right now, but I think you really have to start being careful of new entries here because, just like anything, just like any of these sectors that end up mooning, you know, they run out of time, they run the course, and then it's over with. Can't last forever. Can't last forever. So, but in the meantime, they've been a good place to hide and make money. You just, you don't want to overdo it and that lose your focus and just focus on that, because then that's how you get stuck. Just like, again, the Cathy names, the SPAC names, the opening trades, everything. Which one, Lewis? Oh, you go home flat at the end of the day. Yeah. No, I'm talking to somebody who mentioned quality as the next phase. You want to be careful not owning too much of that and just forgetting about it and tucking it away, because you get stuck, you get hurt in these things. They've been running, like, look at the CMG. Like, this is considered quality right now. This is considered quality. And listen, if let's say quality is the next leadership group, okay, they're going to have to get hit first anyway. You understand? There's going to have to be a correction in these things eventually. They can't just keep going. Like, I hate to spook anybody, but those of you who maybe were around trading in 2007, that was the last quality bubble I remember. You guys remember that? Before 2008, shit hit the fan. 2007 was the last quality crowding that I remember. It's the only stocks that were going up. Fully loaded, right, Dan? Yeah. I remember, Lewis. I remember because, I'm a growth guy. I like the individual names, the new names, the sexier names. And the only things that were going up were like names that you would never look at a young age. And they just kept going higher, going higher, going higher. Everybody eventually caught on. They crowded in, and then you know how that story ended. Yeah, then quality turns into exactly. All right, what else? That's it. I mean, that's it. There's no major changes from the last time we met. We'll see how this week pans out. Our tactical sentiment didn't update yet. Why, you think we're close? Close but not green. Yeah. I don't know. That thing is, I've been wrong, especially of recent. Sometimes I think it got hot, it didn't get hot. But I think the rest of the week we got to be a little more careful. Just if you're trading intraday, just make sure you have your stops on, because gamma could work both ways. We haven't seen negative gamma, work in a negative way in a while. Things can get a little slippery. But why, you guys think? Yeah, it has been. And Dustin, just a heads up, okay, a disclaimer, because again, we've been in a bull market for a while. When the bull market ends, Dustin, you're going to see signals like that fail. And that's going to be the clearest sign that the environment has changed. Right? Because when that fails, that means the VIX is seeing some real buying. You understand? Right now in a bull market, every time the anti-VIX flashes a bullish signal, okay, what it tells us is we know VIX is a losing proposition in a bull market, okay? So you had aggressive buying, they're going to get stuck, and the smart money is going to come in and short the shit out of it, right? And this is what it looks like. Okay? So think about it. All these are anti-VIX bullish signals, every pop. You know, there's going to be a time it fails. And like Lewis is saying, it's going to tell you a lot. So make sure it's just a losing trade. And, you know, to take it easy. You know what I mean? Don't force it into a winner. Because, you know, it doesn't always have to pan out like this, but if it does, yeah, I look at breadth not really as an actionable signal, but I look at it just to get an idea of the health of the market. Yeah, that's an end of day usually indicator I look at, a ratio. You know, but again, not actionable. This is trading view. Trading view. Oh, money flow. Oh, I don't know. I show them from a couple things. Maybe sentiment trader. I show one from there. A graph. Oh, I don't know. Oh, Webull. That one. Yes, Webull. Off the Webull site, the trading app. Webull. You could go on the website too, the website. This comes out every month. This comes out every month. Oh, I didn't even show you guys the rest of this, right? Sector positioning shows investors are trimming cyclicals. Tech, right? This is more recent. Look at energy, once loved. But here's HeartNet's amazing. This is so here's the contrarian trade right now. Okay? You want to be a contrarian, Lewis? You listening? Here it is. If you want to make a play for the growth scare, right? You want to make a contrarian bet? You go long bonds versus stocks and long staples and utilities. That's kind of what we're seeing right now. That's the growth scare. Okay? If reflation, resumption, okay? Long emerging markets in Japan, not even long here. And the reason why is because what he thinks, because we're all vaccinated here, and they're not, you know what I mean? Not nearly as vaccinated. So in the regions that they have the upside, vaccine upside, that's the cyclical play. And for the growth scare, you get long US staples and utilities. That's what we're seeing right now. But listen, that's a contrarian trade right now based off all this. So that's what I'm saying. There's nothing really sexy for us. There's nothing too exciting here. All right? That's not going to excite us. Healthcare, energy. Yeah, we need some more work. This comes out every month, though. Every month. Yeah, utilities have been hot, right? That's what I mean. You can't buy these things now. You can't get long these things now. I know, Martin. I like that NEE too. ND. They've had a nice move. NEE looks really good. Utilities. Nobody wanted these things, right? Nobody wanted these things. And, you know, they go through cycles, though. Remember how hot they were back here? Look at this. It's tough. It's tough out there right now. And you have, you know, COVID. Nobody knows how any of this shit's going to shake out, man. So let me ask you guys a question. What do you guys think, Mr. Powell? Do you think he actually does anything with all this going on now? Probably depending on the job number. If the job number is awful, there's no shot, right? Cruise control. Remember that? Cruise control. That was on the tightening. All right, so if he doesn't even bring up tapering in the Jackson Hole meeting, you know, and if this market's off a pull, you may get a crazy rip. You may finally get that last bull rally. Everything rally. But I don't even think the Fed knows what the hell they're going to do. Nobody knows. They have no idea. Yeah. Matt, I know one thing. When the Fed is tightening, you don't want to be long equities. And when the Fed's not tightening, you want to be long equities. You know? But tapering's not tightening anyway. Yellen tried to get cute, and the market taught her a lesson. And Powell tried to get cute, and the market taught him a lesson. The market, they're puppets anyhow, like Dan's saying. The market tells them what to do anyway. Like, where is so this was 2018 right here. Okay. This is what we're in now. August, September, all quality, FAANG, big caps, and the indices. Everything else was going like this throughout that whole move. And then finally, they cracked. Yeah. Well, I need an inside in the Fed. It'd be even better. A Fed intern. Yeah, I know. So this is what I was talking about, Lewis, in 2018. This is how it all shook out then. And then everything, and then you remember, right? The Powell pivot during the holidays, right here. Yep. And Mnuchin, remember, got on the phone? Oh, good times. Yeah, I think that's what eventually people are going to get worried about, that this bond market has something up its sleeve right now. You know what I mean? Like, everybody's talking about higher rates. Everybody's still talking about higher rates. Like it's a lock. It's a lock. That's how they're looking at it. It's guaranteed. Negative yields, yeah. Well, they're negative in Europe too, right? So, we'll see how it shakes out. Stephen, I don't honestly, I have no reason for it. Like, it's not, I did the homework and I think rates are going lower. It just amazes me that this happened. And while this is going on, everybody's talking about, oh, but when rates start going higher, you got to own this. But what if they don't go higher? You know what I mean? Yeah, technical correction, exactly. Like, what if they don't go higher? You don't think of these stuff. You always think about that in this game. Yeah, exactly. What will you do? Like, they don't think it's an option, right? Like, they think they're smarter than the price action. Because that's where knowing too much in this game can cost you a lot of money. You know, because these are smart individuals. They're not stupid, but they build up such a bias. And even though the market's telling them they may be wrong, they don't want to hear it. No, you're wrong. They're telling the market. Yep. Yep. And it seems to always work out that way. But that's the only reason, Stephen. Other than that, you know, I have no idea. I have no idea. You know, it looks like we have inflation, transitory, non-transitory. I don't think anybody has a clue. You know, even the people who are supposed to have a clue don't have a clue. Yeah. But all that stuff, like Lewis is pointing out, all that stuff is good because that's what creates sentiment and positioning. And when it gets to an extreme, creates opportunities. Yeah, real interest rates are a disaster. Real estate, what's up with real estate, Lewis? Oh, about overheating, right? Everybody thinks it's different this time. Yeah, it's going to be one of these. A guy had a great point. You know, whether it turns out to be right or not, it just had you thinking. He was comparing, he thinks the Fed saying inflation is transitory and using that line over and over, he says, brings back memories of subprime is contained in 07. Right? Oh, yeah. That's funny, though. The Fed, if I had $1 for every time they said that, subprime is contained. I remember people saying, oh, subprime is like, it's like the size of Long Island in the United States, one small little piece. It can't bring down the whole market. And then boom, there goes Bear Stearns, and boom. Yep. All right, guys. So we hang in there, we grind it out, right? Those of you who are members, we know what to look for, right? I mean, I sound like a broken record. I know we get the itch to play more than off the signals, but that's where your best entries are going to come from. No, I don't like the flow one bit. Dan, I've never been so confused about the flow. Same here, Lewis. You know, never been, this rally's been going on for so long. You know what I mean? Without new names catching new action, you don't know what rolls, what's existing positions, what's not, what's replacing stock. It's a menagerie. Yeah, you're going to see a lot of call buyers that go down, but we don't even know if they're clean bets. You know what I mean? They could be replacing stock. They could be rolling. Think about it. They've been buying a lot of these names for how long now without a correction? Like, think about all the call buying we saw from here to here in all these names. Open interest full of massive positions. You know what I mean? So we see action going off in a name over here. How do we know that's a new bet? You know what I mean? How do we know it's not one of these players rolling a piece of their position? There's no way to know. Oh, we're seeing a ton of stock replacement that we know is stock replacement. You know what I mean? That we know is real stock replacement. I'm talking about stuff that we don't even know of. Somebody could be sweeping Uber calls and then selling stock a week later before earnings or something. You know what I mean? It doesn't have to come in as stock replacement. So that's the problem. Again, it all goes away if we get a little cleansing, a rinse. It all goes away. All the problems go away. But easier said than done, my friends. Easier said than done. All right, guys. I ran out of voice too here. All right. So hang in there, grind it out. Do what you got to do to stay alive. Don't lose interest. And better times are ahead, I promise. Thanks, guys, for stopping by. I'll talk to you guys soon.